This is Taking Stock on Bloomberg. I'm Pim Fox. Natural gas up 6% today. Oil above $73 a barrel. Well, let's bring in Carl Larry. Here's the president of Oil Outlooks and Opinion to tell us what is driving these markets. He comes to us from Houston. Carl Larry, welcome to the program.
Thank you, Pim.
Carl, so what is it that's driving the price of oil and natural gas? Is it really demand?
Well, I mean, you know, we have to be relative here to what demand is. Is demand strong in America? For products, refined products like gasoline and distillate, yeah, there's good demand. But, globally, I think we're probably looking at better demand for crude oil. I think the price of oil is going up abroad more than it's going up here, and we're just kind of feeling the after effects. A couple years ago where we were driving the prices, and now we're seeing the rest of the world start to drive the price on us.
But can you give me a little bit of detail? Because, I mean, where is the demand coming from? I mean, we talk about spare capacity in the system of anywhere from 5 to 8 million barrels a day. We've seen gasoline demand, at least in the United States, which is a big consumer of gasoline. Actual number of miles being driven is falling. So who's buying and using all the gasoline?
Well, I mean, okay, let's put demand into context here. For gasoline, we'll start off with it's low. It's low right now. It's lower than it has been, but it's not bad. We're still averaging about 9 million barrels a day, and that's pretty good considering the time of the year and what we're going into. And we're coming out of a recession. Could it get higher? Absolutely, it could get higher, and it probably will get higher. Now, as for crude oil, it's a weird little thing going on here. There's a lot of crude oil in supply. We're having a lot of stocks filling the tanks up here domestically. The problem is that it's not the crude oil that's not on lack of demand. It's the fact that the refining system can't use that crude oil. If the refining system was moving healthily and actually was going on strong, we'd be using a lot more crude than we're seeing used right now. So we're in a new paradigm. There's going to be a lot more stock. There's going to be a lot more crude oil, and going forward, we're going to see this stay this way. But crude oil prices will start to fluctuate based on global demand instead of so much domestic demand. We're going to have to get used to high oil stocks, and that's just the way it is. What we're going to start seeing going forward, though, is probably more demand for products because our refinery system is just not there anymore, and it's just not going to be able to recover.
Are we going to have to get used to higher prices? I mean, do you think that the price of crude is going to continue to rise?
The price of crude probably will continue to rise. This is something that happens every year, right about this time of the year. We'll probably see it rally and rise somewhere into early, late July. And then probably late July, we see a slide back down, and then we kind of usually rally back around September. Seasonality, that's kind of the way it plays out, and I kind of think it's going to keep going that way. Where does crude go from here? Maybe $80, $85, and then comes back off to maybe around $60, $65. But by the end of the year, it could be a lot higher than either of those.
Carl, you mentioned refiners, and I know that one stock that you've been paying particular attention to is Valero.
Yes.
I thought that refinery margins were getting crushed. Why would you be buying Valero?
Well, I'm not looking at margins right now. I'm looking at their ideas of acquisition. They're looking across the pond. They're looking over in Europe at refineries over there, and they're thinking there might be some good deals to be had. Now, this makes interest to me because the refineries in Europe produce a lot of gasoline and a lot of distillate. The distillate in Europe is more versatile. They use it for diesel fuel. They use it for heating oil. Where over here, we have so many different grades of distillate, ultra-low sulfur diesel or heavier sulfur for heating oil. It makes it tough to keep that going over here. And then we have to worry about gasoline, too. So if they invest into Europe and they start looking at refineries over there, I think that's going to be a smart play for them, and I kind of like them going forward based on that.
Carl, what about production? We've seen production levels drop, rig counts are down, people pulling production offline because, well, the prices have been, until recently, have been much lower. Do you see this as a time, then, to be buying oil service stocks? I know Halliburton is one you want to talk about.
Yeah, I think I like buying oil service stocks. If anything, I think that we take advantage of the lower oil prices right now and the hype around these companies and everybody selling them down. Because down the road, I think production is going to be a big deal. Again, maybe not so much domestically. The problem we're having here, obviously, is with credit. With these companies that want to produce, that want to grow, are having trouble getting that credit to kind of make that happen. But will we see more production overseas? Will we see more productions in different areas of the world? Absolutely. And I do think that we have a leading group here, such as Halliburton, that can come out and, make some money out there.
All right, we're going to continue the conversation with Carl Larry. We're going to get into more detail about what's the best way to protect yourself against a market correction in the energy markets. We'll also talk about some of the large integrated oil players that Carl Larry is focusing on. This is Taking Stock on Bloomberg. A programming note: Bloomberg's Taking Stock begins each weekday at 3 p.m. Eastern on Bloomberg 1130 AM, Sirius 130 and XM 129. This is Taking Stock on Bloomberg. I'm Pim Fox. We're talking about oil prices and oil companies that might enrich your portfolio. My guest is Carl Larry of Oil Outlooks and Opinions. He comes to us from Houston. Carl, give us a little bit of detail, if you can, on the integrated oil companies. I know we want to talk about BP and Shell, but integrated oil companies, what's the thesis there? Don't they just have to sort of continuously try to replace the oil that they're using?
Well, they do. I think, when you start looking at companies, especially like BP, they're becoming more versatile. Their slogan is about being green, but more importantly, they are trying to focus on being more green. They're looking at biofuels, at alternative energy, and I think this is where the real value starts to come in, because going forward, as prices get higher in oil and we see gasoline prices start to climb, you might start seeing some talk from the administration about ramping up a little bit of our biofuel energy. And so it's good to see these companies really, start to make, moves forward here.
How important is a 6.5% dividend yield for BP investors? Would that be a catalyst to invest?
It's a tough one. I mean, it's a good thing. It's a good thing that they kind of keep that rolling. But it's also a bad thing that they got to keep paying it out. Right now, oil prices are strong, and they look like they're going to get stronger. But again, that versatility for them to kind of expand out a little bit into different energy fields, I think they're going to be able to take that, and carry it along with their dividends.
What about Shell? Do you like the shares of Shell as well?
I do. I think, what we're looking at international oil, and that's kind of the key thing here. We want to look at companies that are going to be in production, going to be refining, going to be producing, and are global. And, that doesn't hurt. They're a well diversified company, and they're strong.
Carl, let's turn our attention now to what's been going on in the natural gas market. Would it be safe to say that natural gas is really a domestic market? It is yet to really sort of breach national boundaries. What's going on in natural gas? Up more than 6% just today.
Well, I mean, we're starting to see the whole seasonality again I spoke of earlier. As the weather starts to get warmer and we start seeing more energy and electricity production higher, we're going to start seeing natural gas prices come back up. And it's not very different from oil. I mean, the natural gas prices took a pretty hard fall, and maybe there's a little bit of correction going on here too.
Do you think, though, that there's any real industrial or utility demand to justify an increase in the price of natural gas?
No, that's going to be tough. That's going to be tough. I think what we're seeing, especially when we talked earlier about refineries, that we used to be able to depend on industrial use for a lot of that oil that we refined, and I don't think it's there yet. It's not going to be there.
Right.
And with natural gas, it's kind of the same thing.
All right. I want to thank you very much, Carl Larry, joining us from Oil Opinions, giving us his insight into the energy complexes.